A very warm welcome to all our users, investors, and subscribers of the GoldenPi community. I'm Abhijit Roy, co-founder and CEO of GoldenPi, your trusted partner and India's leading online platform for fixed income investments. This is the 23rd episode of our Industry Speak series. In the previous episodes, we have hosted leadership personalities, promoters, founders of a wide range of companies. We have had a deep discussion with these companies, understood their business models, what they're trying to solve for, and how, in a way, they're impacting the Indian market and the Indian landscape. And this we have done with one single goal in mind, to actually cut through the noise and give a great insights and clarity to all our users so that you can make a highly informed decision. Now, ladies and gentlemen, in the market, there are companies which are leaders and then there are companies which are legends. I'm truly honored to have with us a leadership personality from none other than Adani Enterprises, a behemoth that is impacting the Indian landscape in a tremendous way. So, with us, we have today Mr. Manan Vakharia, who is the head of finance at Adani Enterprises Ltd. He has been associated with Adani Group for over 14 years and has got a diverse experience in the finance field, including raising capital via debt and equity. Prior to that, Manan has been associated with Tata Consultancy Services in the corporate finance division, and Manan is a certified chartered accountant. Along with Manan, we have Mr. Pranav Inamdar, who is a director of the Trust Group and Trust Securities. Trust is acting as a lead arranger for an NCD IPO issue of Adani Enterprises. We will speak about that slightly later in our discussions. So, very warm welcome to Manan and Pranav.
Thank you.
Thank you. Thank you for the introduction. Thanks.
So, Manan, will get started with the first question to you. Adani has got a wide range of companies under its umbrella. What exactly does Adani Enterprises do, if you can explain to our users so that we have a proper perspective of the entity? And if you could also share a bit about the background about this very large conglomerate, which is literally a household name in the country.
Yeah. So I'll start with the group first. So Adani portfolio is a portfolio which has invested heavily in the infrastructure and utility part of the country. And we have been making some of the huge investments in terms of the capex and the kind of the assets that we are building in energy and utility, transport and logistics, consumer facing businesses, as well as in the primary industry, which is metals, materials and minings. So we have a diverse and the huge investment. Now, where does the Adani Enterprises Limited, of which I am a part, fits in? Adani Enterprises is Limited is one of the flagship company of the group, one of the oldest company of the group, and it plays a very strategic role in overall infrastructure story or the journey that Adani Group has taken part. How it is strategic and how it is important? Any new business or the new infrastructure investment that is identified, that is curated, invested, built from the scratch, and which is scaled up as good as an industry leader. So that is where the Adani Enterprises makes the first move and makes them incubated within the Adani Enterprises. So whatever the household names like Adani Ports, Adani Green Energy, Adani Power, Adani Total Gas, Adani Wilmar, all of those big entities which are like decacorns in themselves, were at one point in time were part of Adani Enterprises Limited. So they were incubated within Adani Enterprises, and once they are stabilized, once they are mature, they are divested and spun off and listed directly onto the bourses to provide value accretion to the shareholders. So this has been strategy over last 3 decades, which is our history in the listed space. This we have been doing on a continuous basis, on a robust, repeatable model basis, right? Now, what we are doing now, now that is the history up to 2018 or 2019. So all the businesses were demerged So Adani Enterprises is now building a new wave of infrastructure story, which we are now building. What it encompasses of. So first is the foremost, which is again a household name, which is Adani Airports. So where we are building the one of the largest airport platform in the country with 8 operational airports, including Navi Mumbai, which is soon going to be operational. And there we are already the market leader in terms of the number of airports, and we are running the maximum airports after the government of India. Second is roads. Within the transport and utility, we have a roads business where we have a 14 road projects, including the coveted Ganga Expressway. Within energy and utility, we are trying and we are building one of the end-to-end green hydrogen story under the aegis of Adani New Industries Limited, which includes the solar manufacturing piece, which is a buzz of the day, and also the wind manufacturing and other things. So there's a third. Within utility sector, we are also building the Adani data centers in partnership with Connects, so which is Adani Connects, who leads our all our investments in the data center and digital space. So we are building the digital infrastructure to support the digital India. So apart from this, in our regular primary industry established businesses, we are also building the copper and PVC plant, which will ultimately provide import substitution for the India as well as self-reliance for the country. So that's the aim. And obviously the trading and the mining services, which continue to grow at its own place. So this is the brief background I think I am able to cover. So these are the new businesses which are being incubated. Against once they achieve the size, scale, stability, and self-sustainability, these will again get demerged and be hived off. Yeah, and that's how the Adani Enterprises run.
Got it. Got it. I think that's an extremely interesting concept. In the market, we get to see the concept of incubators in, in silos, especially for startups. They
That's
incubate those startups, and then once they are able to scale up, they go ahead and,
do
get
the
into the
listing.
market as a full-fledged entity. Adani Enterprises is actually 1,000 scale size of an incubator. I would say that incubates a host of these companies, nurtures them to become really large enterprises, decacorns, like you mentioned, and then the next path of progress over here is to get them listed onto the exchanges. So I think that's a fantastic story for all our users to learn about. And I understand that there's Adani Ports, then Adani Green Energy, Adani Road, Adani data centers, and a host of other businesses also, which has been incubated and has gone ahead to a maturity level. Great. I think that's a great piece of information for our users. Next, I think will be important, to understand that this is a massive scale of operations, right? With diverse business lines, right? Each company focusing on one area of business, right? How are you, as a leadership member, right, able to balance, or companies able to balance, its focus on these diverse areas and yet remain to grow at a great pace across each of these companies? I mean, growing one company itself is takes decades, takes the life of an entrepreneur. Here it is diverse set of companies. How do you manage to do that?
So that is the question we get time and again. Yeah. So we will speak about obviously and focus on the Adani Enterprises in today's discussion,
Yeah.
and that is what the subject is.
Yeah.
So see, even within Adani Enterprises, when I say there are 5 different businesses or 7 different businesses which are being incubated. At, some may be very small at a nascent stage. Some are really maturing in terms of, if we take an example of Adani Airports. So, but each of these businesses from the very scratch, after initial build-up is there, they run on a very professional basis. There is separate independent management led by CEO, CFO, and the board of directors, which is placed in place very early in the space. While they continue to receive the incubating support from the Adani Enterprises, but they are separate businesses with their goals, strategies, each chalked out very much in detail. We put in place all the COE support from them, Center of Excellence, which we have in-house in terms of GCC, Project Management and Assurance Group, so that they stay focused and they are able to execute the strategy which is chalked out for them. So there is a separate independent structure in terms of the management team, the separate governance body. We put in place the capital management plan for them. So all the pieces which are required for a businesses to grow are provided as an incubator by Adani Enterprises, and that's where the difference actually comes in. And so there is a hand holding which happens, and once they have taken the baby steps, they are on their own.
Got it.
And by the time they get in the teens, they are ready to get listed types. Yeah.
That's great. That's great. I think the next interesting part to understand about Adani Enterprises is, can you share some picture on the financials of the company, like let's say the revenue and the PAT for the past 3 years?
Sure. So, see, you would appreciate last 3 to 5 years when we talk about for any business or any industry, has to be seen in the light of the certain events which have loomed large on
Yeah,
the global landscape, the business landscape in terms of
right.
the be it volatility in the commodity prices, trade barriers, geopolitical tensions, and each of the businesses,
Correct.
irrespective of their industries, have been affected in big
Correct.
way. But even despite all these events, Adani Enterprise has really done a good and sound set of results over last 3 to 4 years. If I talk about FY23 to 25 journey, just as an example, so our EBITDA have increased at a CAGR of more than 25%. The same has been translated into profit and the cash accrual for the company. And the margin, so which is an EBITDA margin on the business, has
Hmm.
doubled from close to 8% to 16% as my infrastructure businesses pick up. They continue to deliver. So margins have continued to rise as we speak. And the EBITDA CAGR has also been at a very sound pace, has been increasing. And what is the growth driver here? So the growth driver is primarily my new and incubating businesses, which is Adani New Industries, Adani Airports and Roads, which are new investment. So over last 2 years, they have started coming off the age, being there on their own and delivering the results. So where if you go back 3 years, and my 35 to 40% of my EBITDA were contributed by new businesses, that has increased to almost 60%. So as we continue to progress further, these numbers will continue to rise. So specifically, as of FY25, we had an EBITDA of around 16,700 crores, so close to $2 billion of EBITDA, 1 lakh crore of revenue, and PAT of around 7,000 crores. Yeah. So that was the number as we closed our FY25, which is the last audited years.
Right. So I think, there's no second thought with these are stellar numbers, despite the geopolitical tensions and a lot of things which are changing the overall dynamics across the whole world. So that's a very interesting part. Now, when it comes to your company, one of the key portions would be the company's debt structure, right? And debt, as we understand, is the fuel to actually scale up any business, right? So the question is, how is the debt structure in the company, and how much, if you can throw some color on how much percentage would be secured, and what is the interest obligation coverage over here, some color on the overall debt structure of Adani Enterprises.
Sure. Uh, so see, we are primarily into the infrastructure space and where we build assets on the ground uh, and the real assets, right? Be it's a power plant, green energy plant, a port, or data center. So everything airport or road, which is we are laying assets on the ground actually. So that requires those are the capital intensive business, and that's why we have to borrow, and we borrow a good amount of money which is required for the project execution. Our borrowing at a consolidated level is a good mix of secured and unsecured, which you highlighted. It's a domestic plus overseas,
Mhm.
long term plus short term. We assess our requirements on a asset to asset basis, on a project to project basis, and we make sure that the right kind of asset is funded by the right kind of capital structure. So that is the basic assessment is put in place. So as we speak today, if I take the FY25 number, my interest coverage ratio and the debt coverage ratio are in a very reasonable and the comfortable space. To spell out the number, interest average ratio would be in the range of 3.5x, and debt would be DSCR would be at 2.5x. So what typically it says is that you can more than twice cover your debt and the interest service obligations, if you talk about. So we are there. So my debt has been increasing. So absolute number, if you refer the absolute number, it has been increasing and it will continue to increase because, as I said, I was building Navi Mumbai airport, right, for last 3 years. I'll just take an example of Navi Mumbai. So the debt will continue to draw because the asset were getting built. Now it will become operational now. So that results will start appearing now as we move to the latter half of this financial year.
Yeah.
So the debt will increase and then it will go down. So that is a journey that will continue for Adani Enterprises, and that is how we outline our credit story to our partners and everybody. The same thing, I take an example of PVC. So PVC we have just started building. So there is no debt or a very small amount of debt. The debt will rise like this and then debt will taper off over a period of time. So that is, and because given the nature, initially there will be heavy debt and then the business or the project asset itself will service itself.
Understood. And what's like the capital expenditure for FY25, and how is it aligned with this revenue generation across your verticals? You mentioned 1 lakh crores in revenue for FY25, right? So how is this aligned, your capital expenditure against this?
So our capital expenditure for FY25 was in the range of around 30,000 crore. So to be specific, 29,800 crore. We expect this number to be in the same range, but it will be slightly on a higher side. 35,000 crore to 36,000 crore is the range that we are looking to spend over next 2 to 3 years. Because most of our businesses, which is airport, Anil, roads, will get incubated and will require an investment and PVC as well as we progress further. So this is the capex we want to continue with. And while I mentioned specifically that we'll talk about Adani Enterprises, but if you hear our chairman's speech, we have committed to do a capex of around 1.5 lakh crore every year. So that is almost 10% of whatever the India does capex at a overall say. So the 10% of the capex is being done by a private side, a single. So that is what we will do at a group level, of which 36,000 crore will be from Adani Enterprises.
So are there any new areas into which Adani Enterprises would explore as a group entity?
So no, really, as I said, primary focus over the numbers which I speak about, obviously we keep on evaluating various businesses, various opportunities. So I'm not saying no to anything. But as we speak, we want to strengthen our existing businesses, make them mature, nurture them, and bring them to a stability level. So obviously that includes airport, Anil Road, and the PVC construction that with PVC plant construction that we are looking at. Obviously, there can be the new airports which come up for bidding. We might have to allocate some of the capital there. We might have to draw some of the debt for this. There are new road projects which we might win. Plus, we are also expanding our solar module capacity by of the same size that we already have. So we are adding the 6 gigawatt of capacity. So all this will require addition, but there is no new business area. It is the strengthening of the existing businesses.
Understood. I think from that solar energy business, which is a part of AEL, one question which naturally comes to the mind is that, AEL has got ambitious goals around green hydrogen and renewable energy. Could you provide an update on this happening area and how these projects are shaping up at your end? Because I think the whole world is now looking forward to, green energy, right? For sustainability. So how are these new areas shaping up in your business profile?
So green hydrogen per se is not that complex as a business, but I'll try to simplify that. So what we are doing under the aegis of Adani New Industries Limited, we are developing world's largest end-to-end green hydrogen ecosystem. So what is the green hydrogen? You take an electrolyzer, pass an electricity, and you get the hydrogen, right, through water. But if you have to power the full electricity which you are using through renewable sources. and that's where we come in. So what we are trying to do, we have bifurcated businesses into two, three parts, and we are in the very first part, which is the production of the solar cells, modules, and windmills. So
Okay.
that is what we are first focusing on. We want to have the supply chain integration first done, and then we will move to electrolyzer, and then we move to green hydrogen. So as a part of this, we already have a facility of 4 gigawatt of solar cell and module.
Okay.
We have India's first and India's only 2 gigawatt ingot and wafer manufacturing plant. All other players are importing wafers if they are at all producing cells from China. We also have an orders to produce 3,300 megawatt of electrolyzers. So this is what we are doing bits and part. We recently, around 15 days back, if you have followed, uh, off-grid 5 megawatt green hydrogen plant is something that we have activated as a pilot case in Mundra. So we are taking steps one by one. So in the first phase, all the steps are done. We are looking to expand our capacity of windmill manufacturing from 2.5 gigawatt to 4 gigawatt, our solar module capacity from 4 gigawatt to 10 gigawatt. And the meantime, if this final pilot study goes well, then we will move further for the green hydrogen production.
Got it.
Yeah.
Got it. Now, in this process of expanding the business, how does raising debt via NCD fit into this broader landscape of the capital raising that you have alongside, I understand, equity, bank lines, and other global instruments, especially on the ESG and the sustainability areas that you have.
Hmm. So there are two limbs to your question. So I'll first talk about how the NCD fits in.
Sure.
So NCD is like it's a 1,000 crore issue, and in my capex, annual capex of 35,000 crore, it's a very small amount, to be honest, to fund the amount. But what we want to do as a company, we want to explore and support the development of the DCM, debt capital market in India. So that's why we came up with an issue earlier. We are now coming up with another issue. So we want to also allow Indian retail and other investors to participate in India growth story, infrastructure growth story, and Adani growth story as such, so that they can earn a higher interest percentage compared to other fixed rate instruments that are available in the market. So this is the overall objective with which we are working. Otherwise, the amount I often get a question why you are taking an effort for 1,000 crore, but that's given. But the idea is to have this instrument in the market, support the development of the market, which the government is also pushing for. So that's the first limb of my answer to your question. And ESG and sustainability, we are taking a strong steps to embed ESG principle in all our businesses from the very scratch. So all our businesses are making sure that they are ESG compliant, they are making the right disclosures in terms of ESG, and some of them are rated very good. If I talk about my Mumbai International Airport or the solar module plant, they are rated in some of the best category. Even the Adani Enterprises as a whole has been rated in the top 5 companies globally in our areas by the DJSI, which is Dow Jones Sustainability Index. By CDP, we have been placed in the leadership category. So these are some of the external validations which we have received for our efforts on the ESG and the sustainability efforts.
Understood. Now, as we're speaking on this lines of debt and being able to raise capital through NCDs, I understand that this 1,000 crores tranche that you're raising is a very small part of the overall debt that is there, right? And understandably, this is with, as it seems, is with actually the intention to broaden the bond market in India and allow retail to actually participate in the India story and how we are developing as a nation. So, and I think it's a my personal opinion is definitely being from this bond industry. Bonds are definitely an extremely efficient fixed income asset class as compared to traditional bank FDs. So definitely that's a great story over there. Now, if you could share your perspectives on how do you approach the debt maturity management topic, right? Because debt forms an integral part of any large conglomerate, and same for Adani Enterprises also. And how are you mitigating the refinancing risk, especially in the interest rate environment, which can be in the rising curve given all this geopolitical turmoil and all the situations which are getting created.
Yes, sure. That's a good question, and it would be important when we speak about the NCD issue, important part of the element. So at Adani, and not just at Adani Enterprises, at Adani Group, and that's why at Adani Enterprises, we have a clear capital management plans laid down for at least next 5 years, if not more. So that's how you know when your maturity is coming up, when you are supposed to have an extra investment that is lined up. So the capital management plan is rolled over and is put in place at least for 5 years. So whenever there is some refinancing or maturity which is coming
Mhm.
up,
Mhm.
we plan at least 12 months in advance how we are going to tackle this kind of a scenario, right?
Okay.
So, and how are we going to approach whether we are going to fund this through internal accrual or do we want to refinance this because there are some other investment opportunities which have come up. So all the assessment is done at least 12 months plus 1 day in advance.
Okay.
And that's how we approach all our debt maturities practically. And that's why you see the efficient debt servicing and everything from the Adani Group, right? Specific to when you highlighted one port interest rate, yeah. So because see on the interest rate sensitivity, uh, we are in the infrastructure business. As I am repeating myself, but it is important to note that we are in this business for at least 30 to 50 years. Whichever business which you talk about, right?
Right.
So we will have a continuity. So we are not really bothered by some of the interest changes and few percentages or the BPS changes in the market because we are in the long term intergenerational kind of asset which is backing this debt. So we are
Right.
confident that the efficiency and the productivity gains that we get out of efficient utilization of the resources and their sweating of asset
Hmm.
can take care of those minor changes in the interest rate. Obviously, we manage them. We take care that we are operating at the right curve of the interest cost. But the idea is not that we will be bothered or worried about so many changes. But yeah, because we try to have a maturity of a longer term to the extent possible, and which is backed by the underlying asset.
Hmm.
And that's why that's not a material point for us to worry about, to be honest.
Got it. Got it.
Yeah.
Now, just extrapolating there, from the interest rate risk to the business risks in the business, on the business landscape. So, what are the key top level business risks that AEL is, monitoring and having a sharp eye on tackling it as and when, they might surface up? And, what are the various mitigation plans you might have? So, I'd request you to share your perspectives on this.
So see, we are incubating several businesses. We
Right.
will always have the project development and construction happening at various places across the country at various sites, different locations. And this requires a huge amount of capital.
Correct.
Plus the supply chain disruption which has been happening over the globe last 3 4 years. So what are the key? Because some of the materials come from outside, some of the materials we are exporting like solar modules and everything. So this is the broad outline over which we are working, right? Now,
Right.
what happens is what are the key risk for us if I talk about? So first is obviously the project management and execution risk, so that we are not executing the project timely, so there are not cost overruns, time overruns.
Hmm.
Second becomes the stabilization of the project as early as we can, so that the return generation is not lagged and they
Hmm.
are coming faster than what we have planned for. Third becomes the obviously the management of supply chain, so that we continue to receive our materials, we continue to deliver our materials to the customers and everybody at the right place at right time. Fourth becomes obviously the capital allocation and the capital management and the debt maturity which we just spoke about, right? So
Right.
these are the risks which we are primarily look at from the Adani enterprise perspective. And how do we mitigate them?
Correct.
So from the mitigation perspective, uh, I'll go in the reverse order. So capital allocation, which I spoke about. So I highlighted in my last answer that we have a strong capital management plan in place well in advance. We plan in advance, and that's how we are. That's as a process, as a SOP we have put in the system and put in place, so that it is on an autopilot mode. Nobody has to go and make an effort. Everybody does their work, and this is generally taken care of. On the project management, we have a strong COE in terms of project management and assurance group, which monitors the progress on a continuous basis and makes sure that if there is any delay envisaged, that is course corrected and taken care of. So the same goes for we invest in the world-class technologies for the O&M capabilities. So all these things in bits and places we have embedded in the businesses in itself by structuring them, plus having the right risk management framework at the enterprise level, at the businesses level, and at the board level. So that's how there is a continuous monitoring which is happening through processes and the review mechanism, and the risks are managed properly.
Got it. Got it.
Yeah.
So it seems, I mean, it's a very well laid out, standard operating procedures across the company with centers of excellence established to look at and continuously monitor the activities of each of these companies under the Adani Enterprises uh, uh, brand itself, so that things are always kept in order. And if there is any risk or any chance of any risk coming in the next 12 months or so, especially on the capital side, you are immediately able to tackle it efficiently. So I think that lays the foundation for great enterprise. Now, coming to this, this size and diversification that you have in AEL, one key question that that can come in anybody's mind is, how do you ensure corporate governance and financial transparency across so many subsidiaries and JVs that you have? Can you share some perspective on this?
So from the corporate governance perspective, we have constituted an audit committee which is 100% independent. So that is not a norm or a statutory requirement in India, but we have taken a step ahead and make sure that our audit committee is 100% independent at Adani Enterprises level.
Okay.
So they keep on reviewing and guiding us in terms of what we are supposed to do in terms of having the right governance, right business practices in place. So again, I'll go back to my last answer again in this case also, because we have a strong SME or COE structure in place. What happens is they provide support in terms of the financial processes, accounting processes, governance processes, risk management processes, project execution strategies, so that everything is taken care of in a programmatic manner, where somebody does not have to go and institute something. So whenever we are forming a subsidiary or joint venture, these COEs or SMEs provide the basic foundational support to them, so that they don't have to build their own processes from the scratch, and they are on the go from the day one itself. So that those system and process support is available to all subsidiaries and joint venture from day one itself, and that automatically brings in the governance, because these are the time tested, continuously evolving operational processes in across Adani platform,
Right.
across Adani group companies, including Adani Enterprises and its all businesses. And
Right.
that's how that brings a lot of comfort as a management to us and to their respective board, and to the external partners, which can be banker, lender, investor, anybody, or a joint venture partner in that case.
Got it. Now, I think let's move on to understand in detail about the NCD issuance of 1,000 crores, which Adani Enterprises is starting on 9th of July 2025. So my question is to Pranav. Pranav, how do you look at this issuance of debt, and what has been your thesis of engagement with Adani, and how do you look at this overall debt that is being raised?
Hi. So this is in continuance to our previous engagement on this public issue. This is a tranche two. The first one we have done last year in September.
Right.
And successfully, we were able to complete that mandate of 800 crores on day one itself. In fact, it was oversubscribed on day one. So that
Correct.
is the kind of not only that's not a reaction, but that is the kind of support that market has and retail investors especially have given us. There have been varied types of investors that we have been able to discover in that IPO, and a lot of learnings, and we are now trying to build on that, and that's why we have this time proposed the issue of 500 plus 500 green shoe, with making it a 1,000 crore issue. Okay, and in the meantime, there are a couple of things that I would like to highlight, which again, in the financial kaleidoscope or a geopolitical kaleidoscope, have happened. First thing, if you see, RBI has cut rates over from last couple of 8-9 months, that we have seen almost by about 75 basis points. Okay,
Right.
the last being 50 basis points, which has
Right.
given the market a very clear direction that where the RBI wants the interest rates to go.
Right.
Okay, so that's the first part. Second part is the RBI, including SEBI, has pushed for development of the retail market, and that is
Hmm.
what we are trying to focus and develop here.
Hmm.
So these two factors have really, really helped, and that has in turn helped, the rating upgrade. So as you said rightly, I mean, your questions were fantastic, Abhijit, and very well answered by Manan sir, and rightly so, that because this is the upgrade story from a A plus, it has gone to a double A minus, and we in 6 to 8 months we might see another upgrade. So this is purely an upgrade story, and we want investors to take advantage of that, so that overall they also be part of a journey where they would have invested in X yield, another now they are investing at a Y, and so when it becomes a Z, which is a much lower yield, they'll be happy
Right.
that they were able to participate at high yields. That's why we are and that is the vibrancy we are seeing amongst investors. Very, very important in determining the direction in which this IPO is getting, and our engagement and belief in this group.
Right. I think that's a very critical point, Pranav, that you mentioned. That there has been a rating upgrade of the company in a very short span of time, right? From A minus, which was the I think 8 9 9 months back, to
A
double A
plus, yeah.
minus.
Double.
Yeah, double A minus stable rating by Care, right? So that's a fantastic upgrade of the company. And what you mentioned is also very pertinent. On top of that, we might see another rating upgrade, right? Great enterprise, fantastic financials of 1 lakh crores in revenue, $2 billion or approximately 16 17,000 crores in EBITDA, margins, fantastically run, diversified group of companies. And on top of that, the second point that you mentioned is also very significant, and I definitely want to add to a piece of information over here, that yeah, the retail bond market has been growing at a tremendous pace, and in India we were lagging behind the developed nations, but we are on the trajectory of becoming a developed nation. So, understandably, a bond market is also increasing with more retail participation. And like in any other developed nation, the bank rates are always very, very low. It's a bond market that outshines over there for returns for fixed income investments. And this is an opportunity for retail to also participate with as low as 10,000 rupees. Now, I think it's also important to understand what will this issuance, the proceeds of this insurance, which is around 1,000 crores, be utilized for in business. Pranav, do you want to take that question?
Yeah, so Abhijit, if I am able to share the screen, I have the brief note on this IPOs, which will help us understand, because it's for us to take it further, and even for the investor community to understand about something about the IPO, where very small nitbits are given. It's just 1 or 2 slides. So if
Yeah,
I'm able
please.
to share.
Yeah, Abhijit, I can answer that.
Sure.
In terms of the proceeds of the issue, we are planning to use the proceeds for the primary repayment and the prepayment of the debt, which is there existing there on the books of the company, as well as for certain our general corporate purposes.
Okay.
That is how we plan to utilize the proceeds of the issue.
Okay. Understood. And is any special feature of this issue around asset coverage, and what are the underlying assets which are being used to secure this issuance?
So we are providing a security of 110%. So it is a 1.1x security which is provided on the issue size. And the security provided is certain loan receivables of the company along with interest thereon, so that the issue is fully covered. And that is what we are providing the bondholder as a security.
Got it. Got it. So, one feature that I understand is 110% asset coverage on the NCDs, this tranche of the 1,000 crores that is being raised. And what is the highest rate of returns that an investor can expect from this issuance?
So for a
So,
period of yeah, Pranav,
yeah,
please
sorry,
take it.
I'll just, sorry, sir.
Sure.
So basically, Abhijit, these are, I'll just briefly run you through the issue structure. The issue is of rated and listed NCDs. They will be listed on NSE and BSE. And there are 24-month, 36 months, and 60-month options with annual, cumulative, and in certain cases, quarterly options also. And the rate of interest will vary from 8.95% to 9.30%. So it's a very, very healthy rate of return if you compare with any other similar paper, or even it will give a fantastic spread over the fixed deposits you have. Now, the minimum application also here, if you see, it's 10,000 rupees, which is 10 NCDs. Each NCD is of 1,000 rupees, and then you can apply in multiples of 1,000 each. Rating, of course, as we have discussed, AA minus, stable by Cr NCD. And the issue is opening on 9th of July, which is the next coming Wednesday, and it is closing on 22nd July 2025 with an option to close the issue earlier. The base issue, of course, as we have said, is 500 crores with an option to retain oversubscription amount or green shoe option up to 500 crores, aggregating a total of 1,000 crores. Here, the debenture trustees are Catalyst Trusteeship, and I have already told you about the listing part, and the security part is 110%. So overall, it's a all in all non-complicated and a very nice simple structure wherein people can have their views or have their funds parked in for 2, 3 or 5 years. So everybody gets a chance to participate, whatever be their investment horizon.
Got it. Got it. So I think for our users from the GoldenPi community, it's important to understand the overall structure. This is a 1,000 crore issue broken into two parts: base option of 500 crores and green shoe option of another 500 crores. This is a rated listed debenture, to be listed debenture, right? It'll get listed post subscription and allotment, and the rating is AA minus stable. The highest rate of return that you can get on this is up to 9.3%, right? There are monthly, quarterly, annual, as well as cumulative payout options. So you can pick and choose what you want to do, right? And the minimum amount.
Only quarterly, half yearly, and quarterly, annual, and cumulative.
Okay, okay. So it is quarterly, half yearly, annually, and cumulative. And also, it is important to understand that you can start investing from as low as 10,000 rupees and then 1,000 rupees beyond that one. And you can invest via UPI. SEBI has made investment process in bond issuances extremely simple. Through the UPI mechanism, you can invest up to 10 lakh, right? And it's definitely providing way higher returns than a traditional bank FDs, and you can remain invested across 2 years horizon, 3 years horizon, or 5 years horizon. And from the data which is there in the market, from the last issuance which was there of a size of 800 crores, I think it got oversubscribed in half a day. So I mean that's a kind of craze that's there for this NCD IPO which has been there. So this issuance is slightly larger than that, and it opens up of 9th of July to 2025. One last question to you, Manan. Like these NCDs, do you foresee liquidity also, in the exchanges, because a bond market, as you understand, is pretty illiquid even in the developed nations. But a lot of the liquidity is actually driven by the brand name itself, right? So do you foresee some amount of liquidity which will be there in the exchanges, so that there is comfort for investors as an additional thing?
So what you said is right. That generally liquidity is not as good as we see in the equity market, right? And that will be, if not completely aligned with, but that will be a case with Adani thing also. But because these bonds are going to be listed on the bourses, and they are going to be tradable, we expect that there should be a good amount of liquidity, considering the brand name and the group where we come from, and there is generally a demand, and our partners in terms of the lead bankers have seen this kind of liquidity in the earlier issues as well, as I understand. So yeah, we obviously the liquidity will not be as great as you see in the equity market, but yeah, there will be enough liquidity to absorb any such cases. That is what our expectation is from
Right,
the market.
right, right. So I think it was great understanding about Adani Enterprises, your overall business structure, and also knowing about the NCD IPO issue. Thanks to you, Manan. Thanks to you, Pranav, for sharing this. And thank you for taking out your time. To our viewers, one small erratum. I think, the rating is Care and ICRA, AA minus stable. And I think it was a fantastic conversation with you, gentlemen. Thank you for your time.
Thank you so much.
Thank you, Abhijit, for hosting us. Thanks.
Thank you.
Thank you, Abhijit. Thank you, Manan sir. Thank you.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.